Assalamualaikum and warmest greetings. I'm Madam Yusnaliza. So we are going to start off with our first topic, Financial Regulatory Framework in Malaysia. And this is topic 1 for FAR210 Financial Accounting 3. So let's start. Okay, before we start, let us look at what are the topic outcomes. So you'll be by the end of this topic, you should be able to explain the development of financial regulatory framework in Malaysia. You are also going to be able to explain the current financial reporting regime. Should be able to also discuss the statutory regulations on financial accounting and reporting in Malaysia, and to explain reporting requirements of various types of entities. So various types of entities are referring to the business entities. And the topic outcome also would be able to achieve if you are able to describe the development of accounting and reporting practices. Okay. And towards the end, you'll be looking at what are the link between MASB and MFRS framework with the global standards. The global standards are actually the one issued by the International Accounting Standards Board, namely the IFRS and the IAS. And the last part is about the need for convergence. So we'll be looking at what are the meaning of the term convergent within the context of this topic. So we will start off with some brief overview of what is financial reporting. I'm sure that most of you had heard the term before, but we're going to still go through that. So what is financial reporting? It's about communication. So communication of financial results. Financial result, I'm sure you know that financial results are in the form of the financial statements of a company. So when you communicate the financial statements to the stakeholders, namely the investor, customers, suppliers, the government, for them to make decision by referring to your financial statement, that action is called financial reporting, when you communicate the financial result to the stakeholders. So for a company, our focus is to the shareholders, right? So which are actually the investor of the company. So financial results, if you have learned before, it normally includes some result of the operation, which is the one shown in the SOPL, showing revenue, expenses, and profit. So it will show you about the profitability of the company, about the financial position, about in terms of the statement of financial position. So you know that these are the major items in the statement of financial position, which is asset, liabilities, equity. Cash flow of the company. So these are in the statement of cash flow, and also the notes to the account, or the statement of changes in equity is also part of the financial result. Therefore, these financial results will give an indicator of the financial health of a company. So to see whether or not a company is financially healthy is to refer to their financial results, which is by way of financial statement. And to communicate this financial result, the tool is the financial statement. So when the company issue the financial statement, they are communicating the financial result of the company. And this financial statement, according to MFRS 101, it contains of a general purpose of set of financial statement, which is the statement of financial position, statement of profit or loss. I'm sure you are aware about this. Statement of changes in equity. You learned this in FAR 160. Statement of cash flow, and the so-called last important item, which is the notes explaining the financial statement itself, notes to the financial statement that provides a detailed explanation, right? Let's look at the next slide. So if you talk about financial statements, they are being prepared by accountants, and when these are being prepared, of course, they are based on some form of rules and regulation. So we are going to look at what we call accounting standards. So let's look at what is accounting standards. Accounting standards are basically the written statement. So in Malaysia, accounting standards are normally referred to the standard at the moment we are referring to the MFRS. Yeah, so MFRS is the written statement that conceals rules and guidelines. And in Malaysia, MFRS are actually issued by MASB. So this MASB is the accounting institution or the bodies that issued accounting standards in Malaysia, and these are to guide the preparation of uniform and consistent financial statement, right? This is important because it will affect the users of accounting information in terms of their decision-making process. So the accounting standards, or in Malaysia, we have the MFRS, Malaysian Financial Reporting Standards, specify how transaction should be recognized, should be recorded in the your so-called accounts, should it be measured, how much is the amount to be recorded, should it be presented, how should it be presented, is it in the SOPL, soft P, statement of changes in equity, and also it provides how transactions should be disclosed. So disclose normally refers to the disclose in the notes to the account. Next, so they are needed to ensure uniformity and consistency. So accounting standards are needed to ensure the uniform and consistent preparation of financial statement, so that it is possible for users to make comparison. Comparison of financial statement of one company to another, and comparison of a financial statement of the same company within different periods. So therefore, if there are no accounting standard, or in the absence of accounting standards, users may have to study the accounting policies of the company, and therefore that is going to make the comparison of the performance difficult. So without the standard, it's difficult to make comparison. Why? Because it was not prepared based on the rules, the standard rules that are being actually used by accountants to prepare financial statement are very important. So let's look at the topic itself now, which we will start off by looking at the historical perspective. So when we talk about historical perspective, we are tracing the history, a little bit of history of the development of financial accounting, financial reporting in Malaysia. So if you could trace back, it was traced as early as in 1940s, where we have the company ordinances. So company ordinances were normally between 1940s until 1965. So until 1960, somewhere like that. So they are the first documented financial reporting regulation, and they play an important role in regulating the financial reporting. So that was company ordinance until the establishment of the Companies Act 1965. So that's why I put 1940s to 1965. So these are mainly for company. So that does not apply to a sole trader or partnership. So Companies Act 1965 was formed in 1965, of course, by the number here. So under the Act, reporting requirements were now being formally established. So reporting requirements of the companies in terms of financial accounting requirements has been regulated and formally established. So they have the Companies Act contains 9 schedules. The 9th schedule is actually the one that specifies the disclosure requirement in the financial statement of Malaysian companies at that time. And there was in 1985, it was being revised, where 9th schedule becomes more comprehensive. Yeah, comprehensive. And they also required another statement of sources, application of fund, which is no longer used now because it is replaced by statement of cash flow. So 1965, actually, Companies Act was established, and these were until 2016. So 1965 until 2016. Why? Because in 2016, the Companies Act 1965, the original Companies Act, were being replaced by the new Companies Act, which is Companies Act 2016. So the new Act, Companies Act 2016, does not provide any more accounting treatment or prescribe any more accounting treatment, yeah, or any disclosure requirements. So what happened is that in the Companies Act 2016, the 9th schedule were being taken out or being removed. And therefore, from 2016, Companies Act has nothing to do with the requirement of financial reporting. And that was actually now where companies still need to comply in terms of the requirement of regulatory body, but they need to comply with the approved accounting standard issued by Malaysian Accounting Standards Board. So Companies Act 2016 specifically requires companies in Malaysia to comply with the approved accounting standards, right, issued by Malaysian Accounting Standards Board. So we're looking into that later. Next is in 1958. So we started off with what happened with the Companies Act, and Companies Act was initially started from the company ordinances. But let's look at the professional parts, yeah, where we have the Malaysian Institute of Certified Public Accountant that was established in 1958. So this is a private sector accountancy body. You can read this, and it regulates the practices of the member that carries the title Certified Public Accountants. So they regulate the practices of the member of MICPA. And what they did was that they issued the first accounting guidance, the accountants that were the members of the MICPA. First accounting guidance in 1968 that dealt with some specimen or pro forma company accounts. So that will actually somehow to comply with the requirements. It was drawn to comply with the requirement of the 9th schedule that was still in force in 1960s, which is in Companies Act 1965. Right? So they were actually trying to complement what was required by Companies Act 1965. Next, MICPA was playing some active role, where in 1978 MICPA was admitted as the member of the IASC, and from there onwards they began adopting international accounting standards. So they do not just issue the specimen company account, but in 1970s, 1978, they started to adopt what was issued by the IASC, which were the documents called IAS. 4 IAS were adopted in that year, 1978, and that was IAS 1 to IAS 4. And in Malaysia, IAS were actually being renamed and being called MFRS. So 1984, they take another important step where they tried to issue a local accounting standard, which is the MAS, Malaysian Accounting Standards, MAS 1 on earnings per share. and these standards were no longer in force today. In 1997, Malaysian Accounting Standards Board took over the MICPA role as standard setter in Malaysia. So their function were mainly from 1958, up till 1997. So somewhere in 1997, accounting standards were issued by a new body called Malaysian Accounting Standards Board. But in between 1958 to 1997 is the MICP. That was the role of MICPA. Okay, there's another body that also played an important role in terms of regulating the financial reporting in Malaysia, which is Malaysian Institute of Accountants. But in the early years, when it was established in 1967, it was inactive. It was not trying to regulate anything to do with financial accounting and reporting. But what was done is that it only focused on regulating the practices of the whole accounting profession in Malaysia. So it focused mainly on the registration of the accountants in Malaysia, right? So in 1987, the operation of MIA were elevated to become National Accountancy Body, and they started to issue accounting standard in 1987. So issue accounting standard only started in 1987. This is actually being done jointly with the MICPA. So in 1987, they started to issue the accounting standard jointly with the MICPA. So accounting standards becomes the ways to regulate financial accounting and reporting. Yeah. And in 1990s, we have another bodies being established, which is public companies, a company security commission in 1993, where at that time public company were required to change from traditional stewardship reporting to full disclosure based reporting. So we'll be looking at what is traditional stewardship reporting later. But in 1993, the Security Commission, SC, required the public company means berhad, public company. Okay, you also have the Central Bank of Malaysia or Bank Negara Malaysia that also tried to regulate the financial reporting, but that was just focusing on financial reporting of banks and financial institutions. So they took the first move to require full disclosure practices, for all banks and financial institutions in Malaysia. So that was in the 1990s. Okay, that's it. We'll proceed with part 2 later. Thank you for focusing and paying attention. I'll see you in part 2.